What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. Please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account, put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of this video. Click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. The feds have an important decision to make in the month of July. And that decision is, do they raise short-term interest rates in their July 26 and 27 Fed meeting? The reason they're going to perhaps raise interest rates is because inflation is currently about 4%. And inflation in an ideal economy would be around 2%. And that's what the Fed is striving to have happen by increasing short-term interest rates in an effort to bring down inflation to 2%. But prior to that meeting, there are some important data that's going to be coming out. And that's really what I wanted to share with you today, is what some of that data is and why it's important to the Fed to get that data and analyze that data to help them make the right decision on whether they should raise short-term interest rates or not. The first piece of data that they're going to be looking at is going to be the jobs report, which is coming out this Friday. And that jobs report is going to tell them if our labor market is still on fire. That is really important, because if there are job openings still being added, or jobs being added to our economy, that means our economy is still overheated. And that means it's going to be harder for inflation to come down. So the jobs report is the first piece of data that they're going to look at to determine how red hot the economy is. The second piece of data that they're going to look at is going to be the CPI inflation report for June. That's going to be coming out on July 12th. I believe that's next Tuesday. That is going to tell the feds if inflation is coming down or if it's going up. It will let them know. Now, two things they're going to look at. One is going to be headline inflation, which is basically the overall increase in prices of our products and services on a month-to-month basis and on an annual basis. That's headline inflation, right? But that's not really the one the Fed really pays attention to. They really pay attention to core inflation. And core inflation strips out food and energy costs, or the increase in food and energy costs month to month, year over year. So the Fed really going to pay attention to that core inflation number. And if that core inflation number is not coming down fast enough, then the likelihood of them increasing short-term interest rates is going to be good. They're going to increase it, right? The third piece of data that they're going to be looking at, the earnings report for major companies for the second quarter of 2023. If these companies report earnings of record numbers year over year for Q2 2023, again, that's another sign that the economy is booming. Why? Because 70% of our economy is made up of consumer spending. And if these companies are reporting record earnings, that means there are a lot of stuff being sold to consumers. And if consumers are still buying a bunch of stuff, it's going to be hard for inflation to come down. When you got more demand than you got supply, prices go up. And that's the reason we're in the position we're in with inflation right now, is because we had limited supply of goods and services, but we had unlimited demand. So that drives up prices, which what? Drives up inflation. And that's not good for our economy. So those three pieces of information or data, jobs report, CPI report for June, and then starting July 18th, earnings reporting for a lot of major companies, including Tesla. Y'all know I'm a Tesla fanboy. Those pieces of information or those data reports are going to help shape whether the Federal Reserve on July 26 and 27 decide to increase short-term interest rates. Now, the market is already convinced that the Fed will increase short-term interest rates in their July meeting by 25 basis points. So that's already priced in. The question is whether the Fed is going to continue to increase short-term interest rates after their July meeting. A lot of people think they will increase again, perhaps in their September meeting. I don't know. We'll have to see. But for July, those are the dates I want you to think about. Those are the pieces of data connected to those dates I want you to start thinking about. Because that's going to have a huge effect on what? Assets. Specifically, paper assets. What am I going to be buying? Well, I'm going to be buying ETFs and index funds that track the S&P 500 index. I'm going to be buying a tech ETF, specifically Vanguard Information Technology, VGT. And the reason I'm buying the tech ETF is because this AI boom is already starting to run, guys. You can already see what's happening in the NASDAQ. It's taking off. I think over the next 5 years, you're going to see AI really boom to the tune of about $300 billion. And I want to be positioned right now in a good, strong tech ETF to be able to capture all of that growth. So that's why 30% of the money that I'm investing is going into a tech ETF, specifically Vanguard Information Technology, VGT. 50% of the money that I'm investing is going to go into a broader based stock market ETF like the S&P 500 ETF that Vanguard offers. And the ticker symbol is VOO. So 80% of my money, guys, is going in S&P 500 ETF and a technology ETF. That's 80% of the money that I'm investing. And I believe that's a winning formula for me. 20% of the money that I'm investing is going to go into individual stocks. Tesla, Apple, NVIDIA. Those are the three right now that are on my radar. Obviously, I love financial services companies. Why? Because I was in the banking industry for 25 years and made a lot of money by investing in bank stock. So I'm going to take a small portion of that 20% and carve it off, maybe 5 to 7% of that 20% and carve it off and just buy bank stock. You got to understand, guys, anytime interest rates are high, banks make money, especially if they're good banks that know what they're doing. And the ones I invest in know what they're doing. Bank of America, Wells Fargo. Anytime interest rates are high and they can charge people more from an interest rate standpoint to borrow money, they make money because they're not going to pay you an interest rate on your savings account or your checking account worth anything, right? Not the big banks. But then again, they're going to turn around and lend money to you at 7, 8, 9, 10%. But they're going to pay you 1% on your money market if you're lucky. I'm talking about the big banks. You can go out and find these little small pop-up banks that give you higher interest rates. But the big banks, they're typically not going to do that because they don't have to. Because people are going to come to them to borrow money because they trust them. They're too big to fail. They're tier one, trillions and trillions of dollars worth of value in those banks. So people trust them and they know that, and they don't have to give you as much on your savings account, but they're going to charge you whatever the market rate is for a loan. So I like investing in banks, tier one banks, because I get a good return on my investment. Plus I get a good, strong dividend while I hold my money in their stock. But that's where I'm investing 100% of my money, guys. I'm not telling you need to do that. But what I am telling you is you need to put yourself in the game and you need to make some plays. You need to put yourself in the game and you need to make plays. What's the game? The game is buying assets. Put yourself in the game to be able to buy assets, right? You got to buy assets, which in my opinion, paper assets is the way to go right now. Making plays is simply you dollar cost averaging in every single month into those investments. So you got to take yourself off the sideline, put yourself in the game, and then you got to make some plays. See, we spend way too much time, in my opinion, gathering knowledge. We spend a lot of our time, 80% of our time, we want to gather knowledge, which I get it, but knowledge is not going to make you wealthy. Taking action makes you wealthy. See, that's where keep making plays, put yourself in the game, keep making plays. See, keep making plays is taking action. Dollar cost averaging in every single month to your favorite investments, your favorite paper assets, so that you can build wealth. 20%, guys, 20% of us take action. But 80% of the wealth is built through taking action. But only 20% of the people take action. 80% of the people seek knowledge, while 20% of the people take action. So be one of those 20% guys that take action. Take yourself off the sideline, put yourself in the game, keep making plays. That's what you got to do. That's the winning formula to build wealth and get yourself to a point where you don't have to depend on someone else to take care of you. And let's not get it twisted. If someone's giving you a paycheck because you're giving them 8 hours or 10 hours or 12 hours a day and they're giving you a paycheck, that person controls your financial destiny. Period. Because guess what? If they tell you they're not giving you that check next week, what you gonna do if you ain't got no wealth, if you got no assets? It's gonna be tough on you. So what you wanna do is you wanna get yourself out of that situation where you're dependent on someone else to give you a check. You want to put yourself in a situation where your assets give you a check. Nobody can take my assets from me. Whoever giving me my check over here can take that check from me. Nobody can take my check from me if it's coming from my assets. But if someone's giving me a check because I'm giving them time, I'm exchanging time for money, they can take that check away from me. So I don't want someone controlling my financial destiny. I don't want someone else controlling my time. The only way I get those two things back is if I take myself off the sideline, put myself in the game, and keep making plays. That's the only way I get myself in a position where I control 100% of my time and I control 100% of my financial destiny. Drop me some comments down in the comment box and let me know what you think is going to happen at the end of the month when the Fed meets. Will they raise interest rates? I think they will by 25 basis points. And I think this data that's going to be coming over the next 3 weeks to them, right? Jobs report, CPI report, earnings reports from top companies in America. All of that data is going to go into their decision on raising interest rates, which I think they will raise them. So let me know what you think down in the comment box. If you want the 12 free stocks from Webull, click on the link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. Once again, take yourself off the sideline. Put yourself in the game. Keep making plays. The only way you do that, you got to have a brokerage account. I use Webull. That's the reason I talk about it every single day, because I use it every single day. You notice I don't talk about any other products. I'm trying to sell you guys all this other crap. All I talk about is what I use, what has been proven to me to help me build my wealth. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.